Don't forget, you're here because you want to learn about how to buy a house. You want to know how much down payment do you need. You want to know what credit scores you need. You want to know, I just bought a Cadillac Escalade. The payment is $1,500 a month. What do I qualify? You have all these questions in your brain bouncing around. So tilt it to the side. Hit it a couple times.
No audio.
Put your questions.
No audio. Thank you. Working on it.
What is that?
So they can see.
Oh.
Can we hear now?
Andres, can you hear us?
What's
Andres.
up, Andres? Thank you for letting us know.
So, Andres, as I was saying, you're here because you want to know all the questions on how to buy a house. You want to know what the down payments are, what the FICO scores you need, how much money you need to make. You're going to give us your exact scenario so that when you're ready to buy a house, you're ready to go. We're going to send you down the right path, so load up that chat box. Andres, thank you for your help, but load up that chat box with all your questions, comments, concerns about buying a house. Jay, hi. Are installment loans no longer considered within DTI? If there is less than a year left?
So the answer to that is yes and no. Because the way you phrased it could be 12 months. And if there's 12 months in it, I have to consider it. But if there's 10 months, I don't have to consider it. 10 months is the guideline. So if there is 10 months or less, I can just ignore an installment loan. Bye-bye.
Vote for Pedro. What's the typical prepayment cost on a DSCR loan? Thanks.
Prepayment. What do you mean prepayment? Down payment? Down payment probably. Down payment on a DSCR is going to be 20% is kind of typical, sometimes 25%. You're going to see up here that there is a 15% version.
Tom the Bomb.
And there is, but you better have everything is perfect, man. That thing better debt service at 1.5 times ratio. You better have an 800 plus FICO. It's pretty cool. I mean, 20% is the norm. Mortgage Sabina. Hey, Mortgage Sabina, we appreciate you being here. We're two loan officers, been working for a long time. We appreciate you showing up. You can either come in to learn or give advice. Either way, what's your rate for investment property with 30% down, credit score 800 plus? So, Mortgage Sabina. Let me see, 30% down, 30% down. So, if you're in the mortgage business, which I think you are because your name is Mortgage Sabina, you know that I can't actually give you a offer to lend, but I can tell you what we are putting out on the New American Funding website. So right now, we're putting out on a VA loan, 5.375 30-year fixed. FHA loan, 5.375 30-year fixed. 15-year conventional, 5.25, and a 30-year conventional, 5.75. Now that's for obviously primary residents. There are some factors. 30% down is going to cover a lot of stuff. As you know, Mortgage Sabina, I need 20% down or more on an investment property. And our rates are pretty good, but I will say that there's a spread because the APR on the 5.375 is showing 6.012, which tells me there's a buy down inside of that. We're very competitive with investment properties, especially if you get into the jumbo. If you get into the jumbo, I can beat most brokers out there. In your conventional conforming, we're competitive. So rates, what would you guess a rate at?
For an investment property with 800 plus?
Yeah, 800 plus, I'd say 6125.
Yeah.
Which there's a buy down in that. 61.25.
Probably.
Sexy black. Oh, dude, check that. I don't know what that
Mortgage
is.
Sabina, is this for you or is this for a client? You gonna send us a deal?
Yeah, we appreciate you, Mortgage Sabina. We appreciate all loan officers on here. We really do. Some of them very smart. Some of them are brand new and they just want to learn the business. We've been doing it for a very long time. I've been in the financial world for 35 years. So a lot of good things here. We did run into a Chapter 13 thing. Tell us about bankruptcy Chapter 13 that we're actually dealing with, and we're fighting with underwriters. Like literally, he's going like this. He's like, Mr. Underwriter, you don't know what you're talking about. And the underwriter's like, oh yeah, here's the guideline. He's like, no, that's not what I said. And you don't know what you're talking about. And he's fighting back and forth with the underwriters. I'm watching the emails, laughing. So tell him the story, man.
Sexy Black, thank you for joining. Sabina, gotcha, thanks. Love you guys. I'm not in all states, and I know you are. Wow, what states are you in, Mortgage Sabina? I want to know what states you're in. Where do you work out of? Who's your bank? Let me know. So back to what he was saying about the bankruptcy, chapter 13. Okay, so here's how it's understood. How it's understood is once you enter into chapter 13, you're going to have a restructure of how to pay back your debts. Okay, so let's just say you owe some credit cards, some car payments, some installment loans. They're going to put a little deal together and say you're going to pay $500 a month. You have to make this $500 payment, and that's the agreement for chapter 13 bankruptcy. These debts, these credit cards are going to go away. These installment loans are going to go away. The reporting negatively is going to go away. You just got to create that agreement and pay that deal on time. Okay?
Bankruptcy.
So,
Bankruptcy.
For bankruptcy, chapter 13. So here's what's going to happen. You make your payments on time for the first 12 months, okay? From the time you started that deal, it could be January to January, March to March, June to June, whatever it may be. After that fact, as long as the bankruptcy court says, yes, you can go ahead and get yourself a mortgage because you've been paying your bills on time, you can then move forward with buying a house. FHA, FHA, FHA. Not Fannie Freddie, FHA. Okay? Now, here's the situation that we have. I always double check things that seem a little different, okay? That seem a little different. So I took the credit report, I screenshot the day that they entered into bankruptcy, I screenshot the day that they discharged, I screenshot that it was a chapter 13, and I was just verifying with an underwriter. And the underwriter said they need to make 12 payments on time and we need permission from the court. And I go, wait a minute, why do we need permission from the court when this thing is discharged? Now know this. The day that they went into bankruptcy was 2019, or the year was 2019. I think it was January 20th, 2019, which means that that 1 year was somewhere in 2020. So that's the 1 year of payments on time, and then it's discharged, which means they went from the beginning all the way to the end, and then the guy says, we need to have permission from the court. Permission from the court? This thing's closed.
Discharged.
It's done. It's completed. So I go, hey, Lee, take a look at this. Isn't this BS? And Lee's like, yeah, it doesn't make any sense because it's been discharged, which tells me that they've already fulfilled all the agreements. The court's good with it. The court's actually done with it and closed the case. Why on earth would they come back and say, sure, they can buy? So I took that same data, sent it back up to the underwriter very nicely, because Lee is right. Sometimes we get a little combative and we go, hey, you're wrong and here's why. So I just say, based on this data that you sent in, this means that they can move forward because of this date, and this means that we don't need to get the court involved because of this date, correct? And you know what the underwriter said?
Yep.
You got it, man!
What does your credit score need to have to be to get an FHA? Very good question.
So swaggy mo.
Textbook answer. Textbook answer, 580. Textbook answer for 3.5% down. Textbook answer. Textbook answer, 500 with 10% or more down. Textbook answer. But in practicality, if you have a 580, there's problems there. And because of those problems, underwriting is very tight right now. It's difficult to get a 580 file approved. Difficult. It's starting to get easier because interest rates are going down and the banks are easing up on the underwriting. We're getting an unbelievable amount of applications right now. We have them coming in left and right, and old applications that didn't qualify. They're like, hey, do I qualify now? Oh, all these different creative ways of, hey, how can I buy a house this way? How can I buy a house that way? I probably took 5 phone calls this weekend from people that are in escrow but want a creative, different way to do things. I couldn't believe, just sat there going, oh, wow, okay. And then another one, then another one, then another one. So there's a lot of activity going on, which means that the underwriting is starting to lighten up a little bit, and everybody's starting to feel that the rates are going to go down a little bit, and the market's going to get better. Good news, you can buy a house.
Yeah. Say hi to Yana, man. Hi, Yana.
What's up, Yana? Great to see you, Yana.
So Mortgage Sabina out of PA.
PA.
Love it.
Dude,
I was in PA about a year ago.
I hope the Orange Man wins PA because that's one of the
That's
big
gonna be a
states,
tough one.
man.
That's going to be a tough
That's
one.
one of the big states. Please vote for the Orange Man. If you want to make a lot of money, Orange Sabina, please vote for the
Orange
Man.
Sabina?
Yeah, Orange
It's
Sabina.
Mortgage Sabina.
Mortgage Sabina. Yeah.
Anyway, I was in PA about a year ago. That is a rural state, man.
Very rural.
There are deer right on the edge of the street everywhere you go. Can I have lunch? Take one down? Whatever.
Turkey, man, turkey.
Kale, did you answer that one?
Yeah.
All right. Miss
My
Mrs.
co-borrower,
Combi?
that's a weird font.
That's essay style.
My
co-borrower.
co-borrower owns a home. All right.
Nice.
Isn't on the mortgage. Hold on. Let me process that. Okay. Don't live there or pay. What will that affect in underwriting? Okay, my co-borrower owns a home.
Oh, that's easy. That's
Okay.
easy.
So if he owns a home, he's a homeowner. Okay, automatically off the table. All first-time homebuyer programs sounds horrible, but it's not. It's 2 programs: Home Ready, Home Possible. Doesn't really hurt you at all. He owns a home, no mortgage on it's what you're telling me, or he's not on the mortgage. One of the two. Which means if I'm going into a primary residence, that's green light for FHA, Fannie Mae, Freddie Mac, USDA, or VA. Green light for all of those. All of those. As long as it's his primary residence. Did I get that right?
It doesn't even have to be primary. It's co-borrower. It's going to
Okay.
be a non-OC co-borrower. So it doesn't even have to be primary. So that borrower is free and clear.
Mo Money 664. Nobody can approve me. I need help. I hear that all the time. Mo
going on,
Money.
Mo Money?
If you really want to get approved, we'll teach you how. Whether we can do it or not, I don't know. But if let's just say you come in at a 544 FICO and you're like, "Hey, somebody, please approve me. I have a 544 FICO." I'm gonna tell you, yeah, nobody's gonna approve you. Nobody.
Unless
Here's
you
the
got-
here's the path.
Yeah, there you go.
Here's the path. From 544, I need you to get you to 620. I know they say 580, but I need to get you to 620. So let me show you how. And I'm going to give you the exact path. And Mo Money, is it Mo Money? Yeah. Mo Money 664, if you follow this path, I'll get you approved. I'll get you approved. But if you don't follow it, you just go cry to another loan officer. Nobody can get me approved. Well, it depends. Whatever it is.
Mo Money, you have to tell us your challenge, though. Here's why.
Yeah.
There's millions and millions of people watching right now because that's our
Millions.
audience.
Yeah, millions.
Now, what you're going to do is you're going to tell us your challenges. We're going to help you solve them with an idea because we don't see your credit report. We don't see your income. So this is you telling us data that you believe from the loan officer. And then we're going to help the world buy a house. So, Mo Money, what are your challenges? Jose Arias, maybe an over-asked question, but what about my job history affects my pre-qualification numbers?
What about my job history? Okay, so Jose, I'm going to read into it my way, but I'm going to let him read into it after. So, Jose,
Tom the Bomb said, I listened to you both.
what's up, Tom the Bomb? Badass.
Yeah, the badass
We are
house.
badass. So, what you got to do, what you got to understand is that there are multiple ways of earning your income. So, let's just say you're hourly, and your hourly is, $15 an hour. And that $15 an hour is roughly $40,000 a year. So you make $40,000 a year. We call that base, okay? But you can't really buy a house on $15 an hour. So because you're a dynamo salesman, amazing, just kill it salesman. You also make another 40 grand a year on commissions, okay? Well, first we take the base, and then we go, okay, cool. We can absolutely give you the base. Then we look at the commissions. And the commissions are going to be looked at through a couple of different eyes. First off, do I have 2 years? If I check that box, then I can move to the next one. If I don't have 2 years of commissions, that's it. You get your base. But if I do have 2 years of commissions, then I say, cool, how much did you make last year? And you didn't make 40 last year. You made 30. All right, cool. How much did you make last year? 40. Beautiful. So I go from 30 to 40, and I have ascending income. If I have ascending income in commissions, I already gave you your base, and then from there I get to give you year-to-date commissions. Now, if it's flat or descending, then I have a different scenario. I have to take all 24 months, divide by 24, and then give you that number. So that's how your income and your jobs can affect the purchase price of what you're buying.
Thank you, Jose, but I didn't see the hearts fly in, Jose.
Dude,
Where's
Jose.
the hearts at?
Jose, I gave it to you, man.
Tom the Bomb said, and I got approved, and now I'm at a 2% interest rate. We've done 3 loans and a few Earls.
Damn, Tom the Bomb.
We got some
dig
history.
Dig seeing Tom the Bomb on the feed.
Golden Palace, thank you for the love. Gaza. Hi, guys. I have a question for you guys.
All right, let's go,
So,
Gaza.
3 of us co-signed for buying a house. Is possible one of us can have the opportunity to have back what? Have back what, Gaza?
Have back what? Well, if all of you are on co-signing on a loan, that means that you're like, hey, Mr. Bank, we'd like to take out this $500,000 loan. And all 3 of us are going to go on the loan. Then the bank's going to go, all right, let me see all 3 of your incomes. All right, based off of what you're showing me, I will lend you $500,000. If you're saying, hey, can one of these guys just hop off the train? No, that's an obligation for the term of
up,
the
Vanessa?
finance. Now, if two of you decided to refinance and you could qualify when you only can qualify with three before, then the two can buy out the loan that already exists with the new loan, and then those two move forward, and this guy no longer has an obligation. So that's it.
Boom! Shay, I have a mortgage with New American. My rate is 6.25. Can I refinance?
Shay, yeah, sure. Yeah, I don't know if it makes sense at this exact moment, but yeah, absolutely.
Well, Shay, here's my question to you. Is it a VA or an FHA? Because it is, you might be able to do something called a streamline.
Or Earl.
Or an Earl.
Earl.
Which means it's just going to take you from wherever you're at down to the lowest available rate today without having to pay all the fees of a refinance. And then in 2 to 3 years from now, when the rates are at the absolute bottom, you do a full refinance. So maybe we can position you to have some savings in the meanwhile. So Shay, what kind of loan do you have?
Shay, tell us.
Username said percent, 3%? Question mark?
3%? 3%? Well, if you want to do a home ready or home possible, you can do 3% down. That is a first time home buyer program. And the truth is, unless you have a really good FICO score, it's not a good program. If you have a really good FICO score, like 780 or better, the reason is because it's Fannie Mae and Freddie Mac. It's conventional conforming. It's not regular FHA. It's not USDA. It's not VA. This is a first-time homebuyer program for conventional conforming mortgages. So 3% down, yeah, we can do it.
Tom the Bomb said, all thanks to you guys. You really the Stephen Hawking of loans.
I appreciate you.
I do loans.
We appreciate you.
You, that bomb.
No, we're going to get bad.
Lady D. My client is blocked from Experian and can't seem to get a mortgage. The lender needs all 3 scores.
Lady D, all you got to do is say, hey, Mr. Experian, unblock me. And then we rerun the credit.
Bam.
Yep. Pretty simple.
So they probably have an app or they went online to get it blocked, which is a smart move, guys, because as you heard, Social Security numbers were hacked.
Yeah, almost.
So that's not a bad move. So yeah, there's a way there. If you need a phone number directly to Experian or something, let us know. We can help. Miss Crandy, not on the mortgage.
All right.
Perfect. Let's go. Mayor GG, new here. Where you guys from?
He's from right there. I'm from right here.
She's doing it gangbanger style. We're from Holmes.
Orale Holmes. He's from that side. I'm from the east side. That's the west side right now. This is the east side. Orale, east side is best. East side is best.
Stop gangbanging.
We are Riverside, California at the moment. We do business in all 50 states.
That sounds like gangbanging.
Yeah, you gotta have a no doubt.
We're currently in California.
Everybody's strapped in Riverside, California.
Stay strapped.
Strapped.
Get clapped.
Straight strapped. We do business in all 50 states. I do have a house in Texas. So I live in California and Texas. You want to talk about polar opposites? Oh my God. I see one side of life and I see the other side and I'm like, holy smokes, this is different.
So you basically go from San Francisco to San Francisco?
Way different. Way different. Crazy, man. Hey, you ever walked into a restaurant and everybody smokes? They have it.
1984.
Oh, yeah, I know, right?
That was the last time.
I was like, oh yeah. There is a cost of
non-smoking,
freedom.
Please?
Yeah, there is a cost of freedom.
Does non-smoking even work?
Yeah, it does. I don't know. It sounds stupid. Anyway.
Gerald Mangel, can I buy a house with FHA loan, upstate, New York, but I live in New York City? First house.
Gerald, I sure hope so. The answer is yes, you can. And if you're talking about the distance that you drive, that shouldn't be a problem, as long as it's drivable and we can prove that that's going to be your primary residence. So I'll give you one that I had to do recently. We have a person a client who lives or works in Loma Linda. Loma Linda is a city in Southern California, but she lives in Las Vegas. Her family, her dog, her mom and dad are in Las Vegas. She's a nurse. So she said, hey, Lee, this is my home, but this is my job. And I'm like, well, do you want to buy in Loma Linda or do you want to buy in Las Vegas, Nevada? She goes, Las Vegas. And I'm like, but you work here. So I sent it to the underwriter. And I'm like, hey, her mom, her dad, and her dog are all in Las Vegas. And the underwriter said, no problem. Cool. One, does she rent a place? And she did. She rented a room. And then they said, can you prove she goes there enough so that we can call that her home? And I'm like, how do I do that? And they're like, well, she put gas, right? Every time she's up there, you say she's up there every weekend. 3-hour drive, by the way, 3-hour drive. She's up there every weekend. And I'm like, yeah. So I called my borrower and I'm like, hey, do you put gas in Las Vegas? She's like,
She's like, no, I go off fumes, bro.
yeah.
Just coast down the hill.
She's like, yeah. I'm like, you got a credit card you use? She's like, sure. I said, send me the statement. So they did. They sent me the statement, and I said, here you go, underwriter. Underwriter's cool. I believe it. Do it. Primary residence, Las Vegas. Works. Loma Linda.
Hey, do you get some kind of receipt when you charge your car? Because what if they're not putting gas, but they're charging their cars?
I guess so. I think somebody told me that you pay just about as much in electricity as you do in gas.
I think it's more now.
Yeah.
California. Gotta love it. Shay, we already answered your question.
Yeah.
I think you can. You actually told us you have an FHA, Shay, so thank you for that. Yes, I would actually try a streamline right now. Like I said,
we might be able to do it.
if we can make sense of this, 2 steps. 1, we're gonna try to do it so you pay nothing out of pocket. You're just gonna make consistent mortgage payments, and one of those is gonna drop, and then it'll be dropped until you fully refinance. 2, it has to make sense. We have to do a worksheet. The worksheet's gonna say whether or not there's enough savings inside of this. If there's enough savings, truck forward with that streamline.
Yeah.
If not, have to wait until the rates come down a little more.
And although it sounds like we're the heroes and we won't do it unless it makes sense, the truth is it's a guideline. It's called the net tangible value test. Every loan officer has to do it.
Vanessa says you have to pay to use EV chargers, but does it give you a receipt? Because in his scenario, we're able to prove on the bank statement. Oh, I guess it'd be on the bank statements. That's right. It'd be on the
Dude,
bank
what if you
statement.
just start stealing your neighbor's electricity and then charge your car at night and you dig the cord underneath so nobody even knows?
I don't think you can just use a regular plug, man.
I don't think so either. I think it's
Something
220.
fancy. Yeah. Danny, I have 23 years left on my mortgage. If I refinance to a 20-year, would it be paying more towards principal?
Danny, yes and no, because your payment is broken up principal and interest, and it's fully amortized over the amount of the term of the loan. So if you currently have a 30-year mortgage, the majority of your payment goes to interest for the first 15 years. When I say majority, I don't mean 51%. I mean like 85%. 85% goes to interest. Why? Because the bank executives like their Lamborghinis. That's why. Because the banks make a lot of money. It's just the way it works. If you don't like it, don't use the banks. I don't like it, but I have a choice. So if you refinance to 20, the amortization scale will change for 20 years. It will still be the majority of your payment for the beginning of the years will go towards interest because the bank managers like their Lamborghinis. So if you really want to hack it and you want to pay down principal, what I suggest you do is you keep that 30-year loan as long as you have a good interest rate, and then pay exclusively towards principal. Don't make an extra payment because the bank will consider it an advanced payment. Why? Because the managers like those Lamborghinis. But if you designate that this goes exclusively towards principal, then the law states that they must put it towards principal, and you will beat the bank in that situation.
Beat the bank. There you go. User 7705. How can we fix our credit?
Pay your bills on time.
Now, how do you fix it? It's already broken.
All right, pay your bills on time.
But how do you fix it?
Step 1, pay your bills on time. Second, acknowledge anything that is a problem and do not ignore it. Then address every one of those things that's a problem. Like, for instance, let's say you didn't pay Verizon 4 years ago, $400. And you said, F Verizon, I'll show you. What are you going to do, chase me? I'm not going to chase you. They don't give a shit. But they are going to put it on your credit, and it's not going to disappear for 10 years. So now you go, all right, let me address this. Let's call Verizon Collection. You're like, hey, Verizon Collection, I owe you $400. They're like, yeah, we've known. And they're like, hey, I'd like to pay you off. They say, well, we'll take the payment. But here's the catch. I will pay you off with a pay for delete letter. What is a pay for delete letter? That means if I pay you, you delete it. Why? Because it will either show collection for 4 years satisfied or disappear. The better move is for it to disappear. Well, that first person is going to go, yeah, sorry, we're Verizon. We don't do that kind of shit. And you'll be, okay, cool. Bye.
What's up, Cynthia?
Then you'll call back and you'll say, hey, Verizon, yeah, I was just talking to you a minute ago. I'd like to talk to one of your managers. Okay, cool. I've got a little bit of money right now, and I'm willing to pay you the $400 if you give me a pay for delete letter. They're going to say, sorry, we don't do that. You'll be, okay, sorry. I'll just have to call the other guy I owe money. And then they'll go, before you leave, let me go see if I can make an exception today. And then you'll get put on hold for about 10 minutes, and they'll come back and they'll go, you know what? If you make the payment today, we'll give you a pay for delete letter. You'll say, cool. I'd like that in my email by today. And they'll say it's only good for today. And you'll go, okay, cool. Send the money. Delete it off your credit. Credit just spiked. That's how.
All right, guys. 2 things. Also, if you don't want to go through all that work and do it yourself, you can go to the link in the bio and select the button that says Fix My Credit.
Oh, yeah, you can do that.
You can pay someone to do it for you. And right now, right this second, this is just for you, Mo Money. Time for a commercial.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee, at New American Funding by dialing the numbers on the screen. But don't dial right now because we won't answer. Chris's phone is on Instagram.
The gram.
And Lee's phone is on TikTok. So
The
we
talk.
are not going to answer. But as soon as we're done with the live, we will answer and we will help you get your loan. This will disappear now.
Tom the Bomb said, oh my God. Shay, FHA, already answered that one, Shay, so hopefully we can help you. You got the phone numbers now, so reach out. Gerald, thank you for the love. User 9600, FHA rate today.
User 9600. I cannot quote you your rate until I pull your credit, calculate your income, and check your assets. However, I can tell you that New American Funding is putting out that a VA 30-year fixed is currently 5.375. FHA 30-year fixed 5.375. Don't believe me? Go to the profile, go to links, go to cool stuff, today's rates. You'll see exactly what I'm seeing.
Will they see exactly what you're seeing?
Mm-hmm.
Nice. Jose was truck driving 55-hour weeks for 3 years at $20 an hour. Switched to plumber, 2.5 years, and I'm back driving 7 months.
Okay, Jose, yours is a little bit difficult file. It's a little difficult. The reason, because you made commissions for a long time, or hourly anyway, you did 1099 for a long time. Now, you went W-2 and then went back. So yours is a very complicated file because of the styles of income. I can still get you qualified, but I need all of your stuff ASAP, and we'll get you moving.
So he follows up with, was making the same money as truck driving, still making the same amount of money. So the question is, did he change W-2 1099? Are these both W-2 jobs? Are these both 1099 jobs? That's the big question.
That's a big question. That's a big question.
So what is it, Jose? Give us some more data,
Dude,
bro.
Jose, we've been asking you.
Tom the Bomb said, what credit score do you need for the loan, for that loan and rates?
Good question, Tom the Bomb.
Great.
That's a great question, yeah. So New American Funding puts out their best scenario. Like best. So on that scenario, if you dig in, I'm just going to give you a guess. 800 FICO, 25% down, 34% DTI.
And very good looking.
And you have to be very good looking on top of that. Yeah.
Chivas fan, are there any programs for buying a second home or a rental property? Thanks.
Chivas, yes there are. It's actually called a second home program because there are 3 categories in loans. Primary residence, that's where you live. Second home, which means you have a primary residence, but you have another home, and you go back and forth between the two. And investment property, which means you rent it out to make money. Those are 3 categories in the loan business. So if you're going for a second home, the underwriting guidelines are a little tighter. You need 10% down, 680 FICO or better, and you need reserves. Reserves are PITI on your primary and your second home.
Pity. All right, here we go. Ashley Heiklin, how you doing? Welcome back. She said, hey, are there any reason a pre-approval would differ so greatly? You guys said 300,000. DR Horton said 199.
Yeah, there's a lot of reasons, Ashley. First off, it does boil down to your loan officers and the products that they have available. So sometimes, if you go with a credit union or a limited bank, they don't have all the lines available. So you can't go, so FHA, if you're a brand new broker, you can't go FHA direct. You have to have done enough loans and have a big enough volume in order to go FHA direct. So you have what's called overlays. And your overlays drop your debt to income ratio or your FICO score ratio. Those two things. So if you've got a newer bank with a tighter overlay, they qualify you for less. It's not anything to do with you. It has everything to do with the loan officer. So the bank. Now, when you say D.R. Horton usually have what's called a preferred lender, and the preferred lender is usually a broker that's going through this process. So if you're trying to get the biggest bang for your buck, you want to go with somebody that's big enough so that they're direct, because then you only go straight off the FHA guidelines or the Fannie Mae Freddie Mac guidelines. If you go with the smaller bank, there's going to be overlays, and they are going to limit the borrower, but the borrower won't know why. They'll just show up. That's the first thing that comes off my head. What do you think?
So when I first left loan officer school, they gave us the DTI restriction furthest you could push it, and it's something nuts. It's like 2333, something like that. Okay. So when I started building files when I was fresh out of loan officer school, I'm like, man, these guys can't afford anything. And then after a little bit of time went by, I started playing with the files, and I pushed those numbers and going, oh, it's approving for more. Oh, it's approving for more. Oh, it's approving for more. And that's where I found that FHA backend would let you go to a 56.999 and the front end 46.999. From 33 backend to 56 backend is like a difference of like a $200,000 house and a $500,000 house. Okay, big differences and jumps. So what he's saying, correct. What I'm saying, correct. It's all one big hodgepodge of stuff that you can put together to get either 200,000 or 300,000. But here's what we're gonna do, Ashley. We're gonna revisit your file.
Yeah.
We're gonna revisit your file, and we're gonna give you a call and let you know what we see still today, because things have changed. Interest
Make
rates
sure you
may be a
text
little
us
better.
in case that's not your real name. Text us when we get done with this.
What's your real name, Ashley?
Text us and we'll look into it.
Jose Arias was making. Oh, we already answered that one. C. Castillo. Is that CC? What does the market look like for a first-time home buyer? Not the best credit score.
So, C. Castillo, the market depends on your income. If you don't have good credit, now good credit is relative. Some people are like, well, I got a 710. It's not the best credit. I'm like, it's pretty good credit. And some people are like, I got 540. I got some pretty respectable credit. I'm like, that's not respectable credit. Well, I Googled online. I can go down to 350. Yeah, I can go down to 350, but 540 is not going to get you anything. So when we say not good credit, I need to know what not good credit is. Not the best credit. So not the best credit could be 710 or it could be 490. So I don't know what your not the best credit is. If you're looking for first-time home buyer, there's only 2 programs. And the 2 programs for first-time home buyer, that's a very important distinction. First-time home buyer. There's only 2 programs. Home Ready, Home Possible, Fannie Mae, Freddie Mac. Those are great programs if you have a great FICO score. If you don't have a great FICO score, get first-time home buyer out of your head, because it doesn't matter. You can go down payment assistance with not being a first-time home buyer or without putting that word in your world. You can go FHA 3.5% down. You can go 0 down. If you've got, what's the lowest we can go? 640 right now? We used to go 600, but it's gone, right? 640, probably 640
maybe
FICO.
620. Maybe 620.
Maybe 620. So that credit score is important, but that credit score is a big, big deal. Big deal. So if you're not in a hurry, think about getting that thing up. There's a few ways to do it. There's tons of online credit repair. We actually have one on our profile. You can go to the top links. It'll say Fix My Credit. I think they charge you, I don't know, $49 a month, $99 a month, something like that. And they will help you fix your credit.
Yeah. Anybody you want to talk about this? Because maybe you don't want to put your personal data up there on that screen. Give us a call. Our phone number's in the bio. We'll talk about it. Shay, FHA. We already answered that one. Mayor GG, LOL. Okay, thanks. Wanted to see if you could help. We are in different states.
Yeah, we can help you. All 50 states. We close a lot of loans in Texas, a boatload of loans in Texas, a boatload of loans in Nevada, a boatload in Arizona. We
Florida.
We close in Florida.
PA. We haven't done New York still.
Haven't done New York. We did one in North Carolina, but we haven't done New York.
Haven't done New York still.
I'll do New York.
Ahmad H. Berry Esquire. What's considered a first-time homebuyer? Example, what if I own a home but never got a mortgage?
Okay, a mod, Esquire. That's all fancy. That's like
You
a lawyer.
fancy, bro.
That's a lawyer. That's
Fancy, bro.
Oz is a lawyer.
He fancy, huh?
I was doing some lawyering stuff
fancy,
right
huh?
now. Okay, so here's what it is. First time home buyer, the technical definition for you lawyer types out there that are listening. You cannot have owned a home in the last 3 years. That's the technical definition. So, if you own a home, even if you didn't have a mortgage, it's going to show up. Because if you own a home, it's in your name, and it shows up as your name. So that takes you off the table for being a first-time home buyer. But the truth of the matter is, there's only 2 real first-time home buyer programs. Home Ready, Home Possible. Fannie Mae, Freddie Mac. The benefit of those is you can come in with 3% down. That's kind of a benefit. Unless you look at FHA, which is not a first-time homebuyer program. FHA, you can come in with 3.5% down. What? Yeah. So, if you go FHA and you own another home and you're not using your FHA and this new home is your primary residence, you can go FHA all day, every day. So, you do not qualify if you own a home and it's in your name in the last 3 years for the first-time homebuyer programs. But don't let that discourage you because there's only like really 2 of them out there.
See, they're paying attention, man. Tom the Bomb said, so when I move out of California, like how he phrases that,
Yeah.
I think Tom's leaving.
I think so too.
You could still do my home loan?
All day, every day, all states. All states.
What about Florida?
Florida too.
What about New Mexico?
You know what? I'm actually going next week to a top producer seminar in Dallas, Texas, where top producers from all over the country that are realtors come in and I'm like, hey, can you do Illinois? I'm like, yeah, we can do Illinois. Can you do North Carolina? I can do North Carolina. And I just hand out my business cards to all the top producers and we're good to go.
Well, it's just going to rain. Watch. Kevin, thank you for the love. Crystal, I would like to buy a second home, but I have a balance on my first home. What type of loan should I apply for?
Crystal, if you are trying to buy your second home, you need to know what second home is in the mortgage biz. Second home is this. Hey, my primary residence is in, where am I? Riverside, California. Riverside, California. But I like to travel to my other house, which is on Lake Travis in Austin, Texas. I'm not renting it out because I actually travel and go back and forth. That's called a second home. Why? Because I have my primary residence, but I also have my secondary residence, and I'm carrying both mortgages. Okay? So that's a second home. And if you want to do that, 10% down has to be Fannie Mae or Freddie Mac. That's what it has to be. Cannot be FHA, cannot be USDA, cannot be VA. So it has to be Fannie Mae or Freddie Mac, and of the 2, it'd probably go Fannie Mae. So that's a second home. Now let me give you a different scenario. Let's just say that I live still in Riverside, but now my job moved me to Las Vegas, Nevada. And I'm like, okay, cool. I'm going to rent this house out. Now, it's still my house, and I'm renting it. And I want to buy another house in Las Vegas, Nevada. Now, that I still own 2 homes, so that's technically my second home in Las Vegas, Nevada. But it's my primary residence. And because it's my primary residence, and I did not use my FHA or VA on this home in Riverside, I can go FHA 3.5% down. I can go VA 0 down. If applicable, I can go USDA 0 down. Or I can go Fannie Mae, Freddie Mac 5% down. Because it's my primary residence. Even though, technically, it's my second home. So there's a lot of little stuff there.
There you go, Crystal. Call us. Let's talk about it. Danny, I have a 7.5 right now.
All right, Danny, that's kind of high. That's kind of high. A lot of people do, though.
Let's streamline you, bro. Let's see if we can do that.
A lot of people have that.
All of you that are waiting for answers, hang in there. We're going to get to every single one of you. If you're interested in getting a home loan, go to the link in the bio, select apply for a home loan now. And if you want to talk about it, call us.
Shay says, what's a good interest rate? Good interest rate is relative. It's more important, does this deal work for me? Because if you're chasing interest rates, they're going to go down, they're going to go up. Like, I happen to know somebody in this room has a 2%. You have 2%, right?
There's 2 people in this room.
There's 2 people in here that's 2%. 2 people in this room, and there's only...
And Tom the Bomb.
And there's only 2 people in this room have 2% mortgages. So if you ask me what a good rate is, 2%. 2%. But I have a client that I put in at 1.9, and he bought it down. So that was years ago. So everything is relative. If you told me you were getting 5%. I tell you, that's a great rate for today's market. When we quote 5.375 on an FHA, that's a great rate for today's market. Now, if you ask me a year from now and you say, hey, 5.375, I'm pretty sure I'm going to say this. Ooh. Why? Why? Because I believe rates are going to go way below 5.375 a year from now. So it's all relative, but you should look at the deal, not just the rate. The rate is a tiny factor.
Yeah, Nicole Z203. What would be the best approach, like this question, if you own land and want to build a house?
You go.
What's the car?
Yugos or cars? I don't think they make those anymore.
Dude, what do you mean Yugo? But I'll answer the question.
He's certified.
Certified.
He's certified.
Official.
We have to go to school.
Put
When I say
stamp
we,
on it.
I mean him.
Boom. Okay, here's what it is. You're going to do something called a one-time construction. A one-time construction. You're not a builder, so you don't need a construction loan to put a bunch of foundations and a bunch of framing and a bunch of roofs. You're going to build one house on a piece of land. So you're going to do what they call a one-time construction loan. That could be an FHA, it could be a VA, it could be a Fannie, it could be a Freddie, it could be a USDA. All the traditional financing that we offer, we can do any one of those loans as long as you meet the guidelines. Now here's what you're going to do. First thing you're going to do is you're going to go to the link in the bio, or you're going to give us a call, and you're going to start a loan application. We're going to figure out how much you can afford, okay? We're going to find that number, and if you're comfortable with that number, you're going to go find yourself a contractor or whatever that person is in the state that you're in that's able to build houses, and you're going to get a quote from them of how much house you can build with this limit. So let's say it's 300,000 or 500,000 or $1 million, whatever that number is.
It's a lot of numbers.
And then what we're going to do is we're going to then approve you for the program, and then you're going to get what they call draws. Okay, let's call it for a draw is access to funds. Okay, let's say you're building a $400,000 house. So first draw is $100,000. That's going to give you your foundation. Second draw is another $100,000. That's going to give you your framing. Third is everything in the middle and the roof. Fourth is finished. So now you're going to get $400,000 worth of draws. Every single one of those is going to come with an interest-only payment. So you got to be able to maintain that payment while living your current lifestyle while you're paying rent or paying for your car payment, paying for your kids' college, I don't know, whatever you pay for, okay? As long as you can do that, then you're on the track, on the right path of building your own house, Nicole. So if this is something you're interested in, give us a call. Danny, thank you for the love. C. Castillo, thank you for the love. Armachas, can an underwriter request you to open a bank account and have your paycheck deposited in the new state where you are planning to move under FHA?
Can an underwriter request? An underwriter doesn't request. The underwriter don't give a shit. The underwriter looks at facts. The underwriter is like a judge. And the judge doesn't go, hey, I recommend you plead not guilty. Can't do that. His job is to go, all right, present the facts to me. And once you present the facts to me, I will make my decision based on the facts. That's what an underwriter does. Underwriter doesn't go, bro, don't tell me about that bank account, because if I see that bank account, I have to deny the loan. Underwriters don't do that. Your processor and your loan officer and your loan officer assistant might do that. They might say, hey, you should probably open a bank account. But the underwriter, they should not be doing that. Underwriters should be going in, going, all right, cool, here's the facts. Let me make decisions on the facts. And a good loan officer and a good processor will go, hey, yeah, you know that bank account that applies to nothing and nothing and nothing, and it's not involved in our pre-qualification? Why don't we just, I don't want to see the bank statements because it doesn't apply to nothing. It's not going to hurt you. It's not going to help you. Nothing. Let's not even muddy the waters. That's what your LO and processor should be.
Yeah, Tom the Bomb said, you're going to help me move again. That can mean a lot of things, man. What do you mean by that?
What state? Oh, that's a big question. What state? What do you think Tom the Bomb would go? I think Arizona.
Tom the Bomb's a New York City kind of guy.
No, Tom the Bomb not going to New York City.
He loves them people.
New York City could not handle Tom the Bomb.
You're correct. Gabby, should I refinance to make some home improvements? I owe $408,000. My interest rate is 3.75.
Gabby, I would not refinance that. That's a pretty damn good rate. You can get a HELOC. Until we get close to 3.75, it's going to cost you a lot of money to refi. Go.
So yeah, Gabby, do a HELOC or a second loan so you don't interfere with that 3.75 loan. If you don't know what that is, ask us why, or ask us the question, or give us a call. Jose, Both W-2. He's W-2. The truck driver. The wet
W-2.
plumber.
W-2. All we got to do is provide your W-2s. Perfect. Provide an LOE, which is letter of explanation. And then, no doubt about it, they're going to pull VOEs. VOEs are verification of employment, which means they call the employer their special way and they say, hey, can you give us a VOE? And they give a version of what you made while you were there or what you're making while you're there. And then the underwriter will line up the LOE, which is letter of explanation, with the VOE and then go in line with our calculations. And from that, you got your home.
Too easy, Jose. Call us. FTQ5. If I've had lenders tell me different things. I'm 1099, work as a real estate agent, and have a business. Could I qualify for an FHA after 1 year of tax returns?
Here's why you've had loan officers tell you different things. Here's why. Because there is something called a Freddie 1 year LP accept. What does that mean? That means that Freddie Mac, that's the loan prospector underwriting system, if you have a good enough FICO and a good enough down payment, Freddie Mac will say, hey, I only need to see 1 year of taxes for income. However, here's what they're not telling you. We need a CPA or an accountant to say that they've been in business for the last 5 years. I don't need to see the income for the last 5 years because I have an LP loan prospector accept with 1 year requirement. So if I get that, and the only time I get that is if I get a really good FICO score. But if I get that, then the guideline says, hey, I only need to show 1 year of income. But underneath there, it's going to say, must have a CPA or accountant say that they've been in business for 5 years. That's why you get that.
Yeah, and sometimes, depending on your file, if you have great credit, great assets, your income doesn't seem funny, sometimes the approval for FHA may only ask for 1 year. But it's not a guideline moving forward. It's sometimes. So, I don't know, man. Have you had your file put together? Let's see what we can do.
We do a lot of realtor files and a lot of questionable, because there's a lot of realtors who have questionable ways of making income. Let's put it that way. Yeah.
Sexy, spicy dancer?
I don't want to talk about that. We've actually funded we've funded spicy dancers.
Ryan, is it possible to buy the rate down for the life of the loan, or do they step up after X amount of years?
Ryan, there's two different types of loans that you're talking about. The one that you're talking about is an ARM or a 3-1 buy down, 2-1 buy down. And there's a conventional conforming 30-year fixed. If you went with a conventional conforming 30-year fixed, then you would buy the rate down for the life of the loan because it's fixed. If you go with an ARM, ARM is adjustable rate mortgage. And if it's a 5-1 ARM, that means you get in for this rate for 5 years, and then every 1 year it's going to adjust according to the index that it reflects upon. Like, for instance, the LIBOR or the S&P 500. It will move up or move down as the market moves up or moves down. If you do a 2-1 buy down or a 3-1 buy down, that is going to be for 3 years or 2 years or whatever, and then it's going to go back to the prevailing rate. It will all be in the documentation. Now, the next question is, which one is better? And the truth is, it's case by case. Sometimes a builder will offer to give you the money for a 3-1 buy down. I actually prefer to use that money for a principal reduction instead of a 3-1 buy down. But if that's the only choice you have to use a 3-1 buy down, then do it. It's better than nothing. I think there's better ways to do it. There's better ways. There are some loan officers on this platform, whichever one you're watching on, Facebook, Instagram, TikTok, or YouTube, that are running around saying the 3-1 buy down is the best thing since sliced bread. That's because they sell 3-1 buy downs. The truth is, I'd rather use it, if it was me, I'd rather use it for principal reduction. What would you rather use it for?
Absolutely, principal reduction.
Principal reduction all day. 2 licensed loan officers that are in the business, that own homes, that understand it. Yeah. So, yeah.
Yeah, there you go, Gabby V. Oh, no, Gabby V is the next one. Is it smart to refinance now with the 3.75 interest rate, $2,600 payment? My credit isn't great. I need to fix some things in my home.
It depends on, like, if you need a roof because it's raining.
Maybe,
Probably, yeah.
Maybe it's her man.
It could be.
Can't fix him.
Yeah.
He broke it.
Yeah. Maybe he broken, but yeah. So it's gonna be case by case. I wouldn't try not to get out of that 3.75 interest rate because that's a good rate. That's a really good rate. However, if you understand the power of interest and how it works for you or against you, let me give you a scenario that I put together not that long ago. I have this one client who had almost $50,000 in credit card debt. The interest payment on the credit card debt was 27%. 27%. I'm like, you're crazy. This 50 G's, it's going to cost you a fortune to get this thing 50 G's paid off. It's not going to be 50 G's to pay off. It's not going to be 100 G's to pay off. It's going to be more like 500 G's to pay off 50 grand. And they wanted their payment every month. So we put together a cash out refi and consolidated all those debts. And the rate came in that's called 6.5%, which is not great, but it's way better than 27%. And in that scenario, it worked because I did the math for math. And I'm like, yeah, you pay $2,000 a month, but you pay $4,000 a month in credit cards. When I'm done with this, you'll pay $3,000 a month and you won't pay $4,000 a month in credit card. So it's a case by case and we have to work some out.
Yeah. Tom the Bomb said he's doing a second right now for his home needs.
Yep.
It's a good move. ER, thank you for the love. User 1279, thank you for the love. Mr. Block Your Girl. I finally paid off my debt. My DTI is at an 18% now. How long should I wait to apply?
You should apply right now. You should not even, you should just like stop the live, go straight to our feed and fill out the application like right now. Breakneck speed. And if you can, just think about that cartoon character that took off so fast that there's feathers in the air still. When he takes off, yeah, do that.
Mr. Block Your Girl, there you go. Jelly Button. Strange. How easy is it to get a DSCR? Where can I get this kind of loan from?
Well, you can get it from us, Jelly Button. Jelly Button. Jelly Button.
Cute little Jelly Button.
Jelly Button. Okay, so DSCR is real easy if you qualify. It's not easy if you don't qualify. How do you qualify? First, you have to have a good FICO score. A really good FICO score. Like 780. You can probably get away with 720. But you have to good FICO score. The next is the property has to qualify. Because DSCR is built off of the income of the unit. So that unit must provide 125% or better debt service. And if that's the case, easy to qualify for a DSCR.
Boom. Anna said, can I get a loan with bad credit?
No. I don't know what bad credit means, Anna, but no. The reason you have bad credit is because you didn't pay people back that lent you money in the first place. So they're like, hey, Mr. Verizon, can I borrow $1,000? They're like, hey, here's $1,000. All right, cool. I'm not paying you back. Screw you. Then you go, hey, Mr. Bank, can I borrow $500,000? Trust me, bro, I'll pay you back. No, we've seen what you do to Mr. Verizon, so we're not going to give you any money. So is it easy to get a loan with bad credit? No. Harsh?
Accurate.
Accurate.
All right, dude, we got a rapid fire now.
All right, cool.
Real deal rapid fire. You guys
Deal,
ready?
Holyfield, yep.
Here we go. ER says, can your spouse purchase a home as a first-time buyer if they're not on the current mortgage loan?
Maybe. If they're not on the current mortgage loan and they are not on any other properties and you want to use a Home Ready or Home Possible, then maybe. But those are the first-time homebuyer programs. Don't confuse that with FHA. FHA is a primary residence program. FHA, 3.5% down. First-time homebuyer, 3% down. So simple.
And don't try to move forward as making that an investment property either. You will get busted.
Yeah.
Jelly Button. If I'm a first-time homebuyer and I'm needing a loan for a house to remodel, what type of loan should I apply for?
Well, Jelly Button, I'm gonna back that up a little bit. If I am a first-time home buyer and I'm needing a loan for a house to remodel, is that your home?
No, I think he's saying he's buying a fixer-upper.
Oh, if you're buying a fixer-upper, there's only one real program out there, and you have to go FHA. It's not first-time home buyer program. It's FHA with a 203K. FHA is the chassis. That's the loan 3.5% down. But if you need to fix it up, we tack a 203K on it.
So,
Dude, are we at an hour already?
no, it's changing. It's
Does it? Okay.
can't be fooled.
Hold on. We're being technically challenged because they don't think we're really us and they think we might be rolling in the
I
background.
am a robot.
I'm a roll. Okay, so, yeah, 203K on an FHA fixer-upper.
There you go. Antonio, LOL. Once you sign the promissory, they are to give you the money in hand. Here we go again.
I don't know what that means, but okay.
Vegas red lights under 50K loans.
No!
ER. I have a mortgage in my name, only not my spouse's. Already
Congratulations.
Just answered that one. Builder
Yeah.
V. Any new rules for FHA loans?
There's always new rules, Builder V. There's always new rules, and they suck.
Antonio, they are just servicing your loan. You only pay them their interest for mediating between you and the Treasury.
You're probably right, Antonio. I'm not gonna lie, because the bank borrows it from the federal government and then leverages it with T-bills. And you're probably right, but what else can you do, Antonio?
Gabby V said it's so hard to qualify for a loan. My credit isn't great.
Yep, that's right. It is hard to qualify if your credit isn't great.
DFW Home Harbor. I have a HELOC on a primary home. Could I get an FHA loan for a bigger house? My family has grown.
I have a HELOC on a primary loan on a primary home. HELOC. Maybe. So if you have a HELOC and the house that you have, you're departing and you're going to rent it, and you show the rental contract and it covers the HELOC, the payment on the HELOC, and you're moving to another spot where it's going to be your primary residence for your family, I'm going to say yes. I'm going to say yes, because the HELOC is probably not an FHA loan. Probably not. And you probably don't have an FHA loan. So you don't even need the 100-mile rule in that situation. So I would say yes.
Yeah, I would say so too. Antonio, they didn't loan you anything. They can't loan you anything. The credit comes out of your SS.
All right.
Anna.
Congratulations, Antonio. Yeah, you're a man. I dig people like that. You know why? Because they're like, hey, if I respect the lion in the lion's den, I can walk in because we have mutual respect for each other, and he won't eat me. I respect him, and he respects my right to life.
I knew where he was going from that first statement.
I love that.
Here we
shit,
go.
man. No, I know. Antonio's been here before, man.
Anna, my loan
He's
officer
fun.
wants me to raise my points by 100.
He does, huh? Wants you to raise your credit score.
Yeah, that's what she said.
If you have a shitty credit score, yeah, everybody, we're gonna want you to raise a shitty credit score too. Every loan officer worth their salt is going to want you to raise your credit score.
Yeah, Ryan, thank you for the roses. Miss Tricks, can you discuss some risks of refinancing? Can it only be done so often? Can costs, points, etc.?
Okay, so every time you refinance, you start the 30-year clock over. That's the part that most people are missing, because you're like, hey, my payment is $2,000. If I refinance now, it could be $1,900. Yeah, but you had 20 years left, and your new term is 30 years. So add all that up and see if it net makes you, because that $100 a month looks really good. And maybe it is. It might be worth it for you. But actually know what you're getting into, so you don't get like, hey, this is an amazing deal. When I put all the math together, it's not an amazing deal. It's a good deal, so I'd still go forward with it. But there is that problem. Every time you refinance, it costs you money. I don't care what your loan officer says. They're like, hey, no charge to you. Yeah, that means I'm going to bill it on the loan. It costs you money. Nobody's doing anything for free. Nobody.
Gabby
So,
V.
yeah.
Why are HELOCs so hard to qualify for? My credit isn't great. I think she answered her own question.
Yeah, Gabby, HELOCs, everything is credit driven. Credit is your willingness to pay credit back. If you have a shitty credit score, that tells anybody in the future, hey, this person, if they don't feel like paying, they're not paying. And
Yeah.
then they don't give you the loan.
Let me give you something, Gabby. Okay, so there's a couple different ways to get loans. Okay, so if you're going with a HELOC that's an automated system, they want a perfect scenario. Okay, but there's other full doc scenarios. They are not fast. They take 30 to 60 days. They're going to require all this documentation. But as long as you meet guideline, then we might be able to get you a HELOC or a second loan going that route instead. So reach out to us. Mo Money. I have 3 lease cars less than 7 months old and won't let me qualify. What other options do I have?
Mo Money, you're setting us up for a freaking slam dunk. You know why? Because if you have 3 lease cars and they have less than 7 months, you absolutely want me to tell you that I don't have to include them. But because they're a lease, it don't matter how many months you have left because you don't own shit. The underwriter assumes you need 3 more cars. And because you need 3 more cars, you're going to have these same lease payments, and those are going to be on there. That's the downside of a lease.
Sizzle, you're mentioning DSCR. How long after close would I have to wait to move into the unit?
Well, DSCR is not a move in the unit for the most part. It is a income-driven loan because the improvement will provide the income to satisfy the loan. That's the DSCR part. After you own it, you can do whatever the hell you want with it. But in order to qualify for it, we've got to use the rents in order to qualify for the DSCR.
Max Martinez, can you beat 5.0 APR and 13K incentives?
That was cute.
Tom the Bomb. Tom the Bomb's there.
No
and
way.
there.
Tom the Bomb can't be in 2 places at
He's
once.
worldwide. Why?
Why?
In Genome Cam, if they continue to decrease rates, will housing prices skyrocket again, or are you seeing less apps?
Oh, in Genome Cam, I think there's going to be it's going to be a bigger skyrocket in housing prices than you've seen ever. And it's going to last for about 5 or 6 years, and it'll probably start in about a year because we're underbuilt. There's not enough houses. I actually have been advising a lot of people get into construction. If you're new and you don't have a profession, get into construction. Because for the next 5 years, you don't even have to be good. You just have to be there, and you'll make a lot of money. I think there's going to be a skyrocket in prices like we have never seen before until the housing catches up with the population, which is probably going to take 5 to 10 years.
Yeah, Money said, your thoughts on Harris' first home buyer assistance bill?
Oh, money. I want you to tune in tomorrow because I'm going to go into this deep. I think it's junk. And I think it's junk because I've seen all the programs that are out there. I'm qualified to do most of them, if not all of them. And I can tell you that there's one in California called the Dream for All program. Sounds amazing. It does. It sounds amazing. 20% down. That sounds amazing. California is going to step in and write a check for 20% of your house. 20% of your house. So let's just say you have a $500,000 house and you use the Dream for All program. California steps in and writes a check for $100,000. $100,000. That's crazy. And if you look at it, you're like, that's an amazing deal. That's pretty damn good. Until you see the rest of it. The rest of it is this. Hey, state of California wants that $100,000 back when you sell or refinance. They want $100,000 back. And if you wait 10 years, they want appreciation. They want shared appreciation. So if you made an extra $100,000, they want their percentage of that appreciation. Do they help you pay property taxes? No. Do they help you upkeep the home? No. If your electrical system goes out, do they help you pay for it? No. Are they secured by your property to ensure that they never get screwed over? Yeah. So when Harris says $25,000, I know it's going on right now in Dream for All. California's like, hey, how do we invest a lot of money into real estate, but we don't piss off people? We'll tell them it's for them. We'll tell them it's for them. But you know what? But nobody's going to believe that shit. Call it the Dream for All program. Everybody gets a dream. Everybody has a dream. Dream for All. Yes, 20%. We'll give you 20%. Do they help you with your property taxes? Never. Do they cover the insurance on your house? Never. Do they get to share in the exact amount of proportional appreciation? Every single time. But the only one who will understand this is somebody who digs in, understands the program, and goes, hey, the people that use this are getting screwed.
All right, Bill Maher, you done? Jolly Button, is there a way to get a loan for a foreclosed home?
Yes, all day long. Just give me a call. We'll help you out.
Colita Guevara, $700 for a second house?
Yeah, you can do it. 680 is the opening credit score, but 700 will work. It's not the best, but it'll work.
Chaka, guys, I need to do some improvements in my home. I got a 2.5. Should I refinance or should I get a loan?
You have to give us a call because we have to run a lot of numbers.
Colita, is it good to pull credit out of equity? Pull out of equity, sorry.
Colita, depends on your purpose. If you're trying to buy a boat, probably not. If you're trying to buy another house, I would say maybe. Sometimes, yeah.
El Shorty, if I don't end up getting a home and just cancel my loan, do I still have to pay my realtor?
Usually no, unless if their contract was to provide you a ready-made home and you went into contract and you pulled out a contract, they fulfilled their contract. They provided you it. So sometimes, even though you didn't get the house.
Snack Mommy, how do I qualify for a vacation home? We make $260,000 a year and have $15,000 down. Monthly payments, $6,500.
With that $260K a year, you're probably going to be able to qualify. It is a very complicated loan. I've done a lot of them. Give us a call.
For Sizzle, thank you. You're welcome. Colita, is it good to pull out equity? Already answered that one.
Sometimes.
Jonathan, I co-signed with my parents 5 years ago. I'm now married and we would like to buy a home.
Congratulations.
And you can do it, so call us. Chaka, Thank you for the love. Jay, does it make sense to pay off credit cards to zero?
Or pay credit cards to the 10% of the limit. Jay, depends on the credit card. Some credit cards just kill you in interest. I got one. Now, I got an 800 plus FICO. I got like a really high FICO. I got a little letter in the mail that says, hey, your new interest rate is 32%. I showed it to Chris. I'm like, do you see this shit? 32%. I don't use that credit card. But I'm like, holy 32%. Are you guys crazy? So it depends on the credit card. I mean, if you're trying to build your credit, you do need to have a balance on your credit cards. But if you have ridiculous credit cards, don't put a balance on those. Put ones on the lower rates.
You're welcome, El Shorty. And Moto Mommy says, can you explain again the lease vehicle DTI? You have 2 years left.
Lease is always, you have to replace the vehicle so it never goes away. It never goes away, never goes away, never goes away. Because if you're the type of person who leases a vehicle, the underwriter says you're always going to have a lease payment. Because there is no end to a lease. You're going to turn in that Lexus and get a new Lexus. New lease payment always stays the same, does not go away.
You're welcome, Jay.
You know what? We've been Chris and Lee. We appreciate you. We are out.